Welcome back. You're watching us here on Chartbusters. It's the workspace solution provider Awfis Space Solutions. Near 600 crore rupee IPO opens today for subscription. Amit Ramani, who's the chairman and managing director of the company, now joins us to discuss their plans post the IPO. It's an IPO, a near 600 crore IPO, of which fresh issue, Amit, is 128 crores. We see you using about 42 crores for setting up new centers and 54 crores for meeting working capital requirements. Now, for those who are in and around the city of Mumbai, would obviously know a lot of your office co-working space products, but generally co-working space, a lot of people know about what they are right now. What we don't know yet, or what needs clarity, is do you really own the office space that you lease out, or do you lease the space to sublet it to all those co-working guys? I just wanted to understand, your business model. How much of the land that you have right now is owned by you? How much of it is rented? What's the delta here?
So Mangalam is a completely asset-light model.
Got it.
I think it's a one of a kind that we have developed in the industry. We call it managed aggregation, wherein the asset, we partner with the landlord.
Okay.
Typically, we go out for about 35 odd thousand square foot is the average size. And with that, what we tell the landlord is that the new capital towards the fit out or upgrading the asset will come from them.
Okay.
Right? After a period of no minimum guarantee, let's say 5 to 13 months, we then do a profit share or minimum guarantee, whichever is higher. So completely makes it asset light. And then we have completely changed the demand and supply mismatch because there's no fixed rental.
So you don't give any fixed rent, but of whatever you make, there is a share that goes to the...
That is correct.
All right.
So it's the biggest challenge that was there in the global co-working markets was the asset liability mismatch or the demand and supply mismatch. So we've solved for that.
And what is typically the spread? The difference between what you get and what you have to give to them?
So typically we would share back with the landlord after covering the operating expense, 65 to 70% of the profit goes to them and the remaining comes to us.
All right.
Got it. Hi, Amit, and thanks a lot for coming down to our studio. First of all, congratulations. It's going to be a big moment for you as well as your team as you'll move towards listing on the exchanges. A couple of details then. Part of the proceeds that you're raising is going to be used for working capital requirements. So how does it help you all, if you could quantify that? And also around 42 crores will be used for setting up new centers. How does that work? What is the cost of setting up a center? And how does this help this 43 crores? How many number of centers or how much of incremental space do you get?
Yeah. So, Nigel, when we started the business, we were primarily co-working. We then expanded our portfolio to add what we call as design and build as part of our office transform business. And that business, basically, we would go to a customer and they would have their own space, they would rent it, but we would fit it out and give it to them as a service, right? So that part of the portfolio requires some working capital, and that's where the working capital is going to be used. The other 42 crores, which is towards the capex, we have positioned about 12 odd centers that will happen with that capital. Total view is of about 45 total centers for FY25. And out of the 12, 8 centers are in the model that I explained, which is managed aggregation. 4 are going to be straight lease centers.
Okay.
And as a result, Nigel, typically if it would cost me, let's say about ₹1,00,000 per seat, because in majority of the cases, our landlords are putting in the capital, my cost of overall capital requirement is half.
Okay.
So it cost me ₹50,000 a seat. So that's how the blend of that, 42 crores is going to be utilized.
So you know who can't use this model, Mangalam?
Us, because 1 lakh rupees per seat is, the seat will sink.
₹1,00,000 is the cost of putting the seat, right? But it costs anywhere between 8,000 to 12,000 rupees a seat on a month, per month.
Those are numbers that
I meant because we have to come to the studio.
And in fact, CNBC is a customer. So.
So we definitely sit in No, we're just kidding. But from what I understand about your business right now, there are 3 vectors of growth for you. The first vector, of course, would be you increasing the space that you have in terms of leasing the number of seats that you have. The second vector would be the existing seats getting utilized a lot more. And the third vector, of course, would be you increasing the yield that you get per seat. So can you give us a sense of all these factors, where they stand right now and where will they be, say, in the next 2 to 3 years?
So without commenting on exact growth numbers, but if you look at our growth over our centers, our cities, our number of seats, FY21 till December 23, average of 50% CAGR.
Okay.
Right. So obviously,
and the number of seat additions.
That's correct. Right. We have today 1,05,000 seats across 169 centers, 16 cities, and 52 micro markets. There's rarely a place in Mumbai that you wouldn't find us today, right? 20 plus locations for us in Mumbai. In terms of the yield, the longer term contracts have a 5 to 7% increment built into them. So these typically would be, let's say, 1 year or longer contracts would have them. Today the average tenure is 33 months. And the locked-in tenure is 23 months with our customers. So a lot of visibility on revenue and visibility on the yield that we would get.
What is the yield typically of the value of the land that is there? And
so of the asset, our partners would make anywhere between about 7 to 8% yield.
Got it.
Right? For us, obviously, it's a revenue to us, but the asset owner will typically make 7 to 8%, and on the new fit out that they would put in, they would make about 10 to 12% return.
Okay, couple of more factors then. The business model looks good. You have a great idea, all appreciated. But the stock market looks at one thing, financials and profitability. So will the company turn profitable in the coming year? Point number one. Point number two is, what does the promoter holding come down to post this IPO?
So, Nigel, you have to look at where we have come from, right? 75% has been our revenue growth over FY21 to December 23, right? As I mentioned, 50% growth in terms of seats, cities, and our chargeable area. If you look at our overall number, right, it's about 616 crores for the 9-month period, right? It's come from FY21, we were negative 20%. Today we are only negative 3%.
Let's not talk about FY21 because that was also immediately post-pandemic, right?
That's
so on
correct.
that base, everything will be looking phenomenal. Let's talk about steady state numbers.
So Mangalam, today we are negative 3%. In actual hard numbers, it's negative 18 crores.
Okay.
The EBITDA today is 195 crores for the 9-month period. The cash EBIT is 67 crores positive.
So short point is, you will turn profitable in the coming year, right?
I can't comment on it, but
That's
we are headed in that direction.
That's the direction.
Well,
Lovely.
headed in the
so
direction.
that point is out of the way. This market loves numbers. And on listing, we'll pull out a few from you as well. But tell us, what about the promoter holding? What does it come down to?
So currently I have 18.1%. It will come down roughly to about 17%.
And the entire promoter holding is around 41.
So we did not have, we have a 20% lock per SEBI. So we had to ask Peak 15 Sequoia to basically put in their shareholding. So they have put in about 3.5% as promoter shareholding to meet that 20% cap. And as a result, they are being tagged as promoters.
Okay.
But technically, I am the only promoter.
So then at some point, Sequoia will also have to, offload their residual stake?
So Sequoia, as part of this offer, is offloading about 66 lakh shares, which is roughly about 11%. 1.5% they've done a pre-IPO with White Oak, and the remaining 10% they will offer as part of this IPO.
Right. And we've also seen an increase in the number of agreements terminated by either clients or the company itself. I mean, I'm looking at this number. For the first 9 months, it's 326. The previous year, it was around 439. How does this work? What's the churn? Why do companies pre-cut their long-term contracts or something of that sort, foreclosures?
So Mangalam, we are workplace as a service, right? Clearly, somebody can use me for an hour, right? And somebody can use me for 5 years, right? So I have today 2,300 client companies that are resident with me, right? From somebody taking 1 seat to somebody taking 2,000 seats, right? Currently, the churn is about 1.2%, right? Which is what you would see in some of the largest REITs as well, right? Average about 15%. So I think churn for us is healthy, right? It's like the airline or the hospitality business, right? Clearly, the first guys coming in take the chunk, right? And they clearly take the bulk of the discount, right? But when the occupancy reaches at a certain level, churn helps us because we are able to increase the
What's your overall occupancy right now?
So overall blended from a center gone live 1 day old to, let's say, from the inception, is about 71%, and for 12 months on older center blended is 83%.
What do you typically break even at?
So in our model, as I mentioned at managed aggregation, I only have to first, when there's no MG, I have to only cover my operating expense, which is 25%, right? Okay. Operating expense is roughly 20%, is consumables, utilities, and manpower, and then common area maintenance. Beyond that, when our MG kicks in, and today in 50% of our centers, which are in managed aggregation, there is no MG, right? When it kicks in, it's usually 50% of the market rental. So at 45%, I break even. Straight lease, I have to get to about 65% occupancy.
Okay, all right. Pleasure talking to you. Thanks a lot for joining in and giving us all of those details. We look forward to the listing day and then we'll get you back on the channel. For the time being,
Thank you, Nigel.
we wish
Thank
you
you,
well, and
Nigel.
thanks for joining in and explaining the model to us. Well, for the time being, guys, I think what we'll do is we'll slip into a short break, come back, continue our focus on markets with news that the Nifty Bank is the one that's under pressure. So we'll have to see whether or not the bit of a bounce is due. Stay with us.